What's going on, guys? It's your favorite mortgage lender, Abdel Kwame, got mortgages. We have got quite a lot to talk about. The Fed has gone ahead and we all know cut their federal funds rate by 25 basis points. We're going to discuss how this impacts the market, what's the things that it directly impacts when we talk about short-term rates, and then really the biggest surpriser, which was home sales. Home sales have jumped up quite a bit since month over month after the hurricanes, and then obviously year over year. We're going to go over a lot of different estimations in regards to inflation. We're going to go over what's going to be really the Fed stance. Why did they change so quickly? What are the things that we need to keep an eye out for when we talk about inflation? And with that being said, I'm going to go ahead and share my screen like we normally do and really dive into the main parameters of the Fed has now spoken. We know that they have gone ahead and cut their federal funds rate by the 25 basis points like we kind of expected. Okay. Now, a lot of us that we want to take a look at is really what does this basically mean for the market? So again, now the federal funds rate is sitting anywhere from 4.25 to 4.5%. Okay. Once again, we saw a 50 basis point cut in September and a 25 basis point cut in November. Now, again, essentially almost every single Fed president had agreed on the cut except one, which was Cleveland Fed Chair Beth Hammack. We know that they also went ahead and confirmed that next year there's only going to be 2 cuts. And I think that was really the surprising force. And that's where the market has now significantly changed. We're going to take a look at where the market is at right now and how it really changed since Thursday into Friday with the PCE report. But again, they were aggressively hiking their rates, like we all know, into 2022, bringing their federal funds rate to the highest it's ever been in quite some time. Now, we know that their goal is to bring the Fed target of 2% for inflation. We're slowly chipping away, and the PCE report, personal consumption expenditure report, show this stat. Now, when we take a look at their dot plot, we know in September, that is when all the Fed chairs come out and really give their ideas of what they're expecting to see heading into next month. And we saw that they had changed their stance. And since they changed their stance from 4 cuts to 2, the Federal Reserve obviously decided to now really impact the market. And that forecast from September to now allowed interest rates to significantly skyrocket, which we're going to take a look at now. Now, we take a look at the PCE report on the core. As you guys can kind of see, it's been pretty flat relatively at 2.8%. Now, when we talk about the core, again, that slight decline, although it's not getting close to that 2%, remember, we're replacing, this is a 12-month lag data. We've replaced the prior month's data readings and the prior year data readings, which we all know last November of 2023, inflation readings was fairly lower. Okay. We're now in comparisons, we're going to see January and April. When we take a look at that, I think it's going to be a lot easier for us to replace that data. Existing home sales, this was the silent sleeper, right? It jumped up 4.8% month over month and 6% year over year. We saw a look at almost 3.8 months supply of inventory. Homes stayed on the market a little bit longer, 32 days as opposed to 29 days. 18% of homes sold above list, and 30% of buyers were first-time home buyers, okay? Let's kind of take a look at that comparison. As you guys can see, that slight uptick in buyer demand, which was really typical after the new administration has changed. We saw 1.3 million homes again available for sale, up 17% year over year, which is awesome, showing inventory slowly start to enter the market. Now, again, this does count some homes that are already under contract. Doesn't necessarily mean, but there's 953,000 active listings at the end of last month. Now, here's another positive news. Home builder sentiment also saw a slight uptick. We are slowly getting close to that positive readings over 50. Future expectations, take a look at this, almost 66 to 63%, which is phenomenal to see. Positive news and positive, really ambitions as we start heading into the end of the year. Again, a lot of these different things, take a look at this quote by National Association of Home Builders Chair. While builders are expressing concerns of high interest rates, elevated costs, and a lack of buildable lots, they are anticipating future regulatory relief in the aftermath of the election. Not surprising. This is reflected in the fact that future sales expectations has increased to a 3-year high. Okay. New construction, we saw a little bit of a slowdown, but this is where I really like to see 9.2% year over year increase in completions and 6% month over month in new permits. which is awesome, right? To see that we're seeing a higher completion percentage, and we're seeing also an increase now of builder really confidence and builder sentiment when we see that. Okay, not a lot going on this week, but it's important for us to take a look at. When we take a look at the GDP report, they revised their readings. Economy grew 3.1%, a little better than what they predicted at 2.8%. We saw a 3% and 1.6% growth in the second and first quarter of the year, showing that positive increase. Another important note to take a look at: initial jobless claims, slight decline from what we saw really last week, but 220,000, and it's still 1.87, near a 3-year high. When we talk about continuing jobless claims, people continuing to apply for unemployment as we continue starting to see some labor market cracks. Again, not a lot going on this week. We will just get some updates tomorrow with new home sales for the month of November. And then again, the weekly job reports. If I don't speak to you guys, have a blessed holiday. Have a Merry Christmas. And I will chat with you guys soon by next week as we take a look at what is going to be the expectation heading into the new year. I appreciate you guys tuning in, and I'll catch you guys soon.